C. The foreign reserve backing for the EC dollar remains strong. The average weekly backing ratio stood at 92.2% in 2022, above the statutory minimum requirement of 60%. The weekly ratio ranged from 89.4% to 95.30% in 2022. Since January 2023, the backing ratio, the ratio of foreign assets to demand liabilities at the ECCB, has averaged 91%. F. ECCB foreign assets at the end of 2022 stood at $5.04 billion. The pre-pandemic 2019 level was $4.58 billion. G. The ECCU had an import cover ratio, ICR, of 6.8 months at the end of 2022 relative to the 3-month benchmark. Having considered the state of monetary, fiscal, and credit conditions in the ECCU, the Monetary Council decided to maintain the minimum savings rate at 2% and maintain the central bank's discount rate at 2% for the short-term credits and 3.5% for long-term credit to governments. The minimum savings rate, the MSR, is the lowest rate that commercial banks can offer on savings deposits. The central bank's discount rate is the rate at which the ECCB lends to governments and commercial banks. Financial stability. The Monetary Council was advised of the following developments in the financial sector. A. Financial system stability brought forward from 2021 was maintained throughout 2022. The banking system remained stable, maintaining ample levels of liquidity and solid levels of capital. Council was also apprised that the number and amount of moratorium loans have continued to trend downwards. As at December 2022, these loans represented just 0.3% of the total portfolio of the ECCU banking sector. This is an important signal from the banking sector, likely reflecting improving confidence and diminishing uncertainty around the economic recovery. Council was further apprised that the passage of critical legislation in the ECCU is just about 71% complete, with Antigua and Barbuda and Grenada having passed all the requisite legislation. In furtherance of the Council's expressed support for uniform financial legislation in the ECCU, the Monetary Council urged enactment of the proposed economic recovery from 2021, supported revenue growth in the ECCU, fiscal deficits. Alongside the economic recovery, there was some progress towards the regional debt targets. The ECCU governments continue to commit to reducing debt levels to 60% of GDP by 2035. At the end of 2022, the ECCU average was 78%, down from 88% at the end of 2020. Growth and competitiveness. Council was informed that the economic growth in the ECCU strengthened to an estimated 8.9% in 2022, a 3.1% point improvement over the previous year when it was recorded at 5.8%. The total real value of GDP to ECCU is expected to return to the pre-pandemic 2019 level by 2023. Average annual growth in the ECCU of about 5% is projected for 2023 and 2024. That said, this projection is highly dependent on global developments. Economic recovery of the ECCU is being driven by tourism, but ongoing challenges with air connectivity remain a binding constraint to faster recovery. A sustainable recovery and faster progress for all requires strong support for initiatives at the regional level and accelerated implementation of reforms at the national level. Accelerating reforms such as those related to innovation, financial inclusion, energy security, and digital transformation, as well as increased investments in building resilience, is critical. Update on BICO and CLICO issues. Council received an update on the effort by the Baiko judicial manager to deliver an additional payout to Baiko policyholders. Council noted the efforts to secure funds from the government of Barbados to make a payment to CLICO policyholders. Change in chairmanship of the Eastern Caribbean Securities Regulatory Commission, ECSRC. The Monetary Council approved the appointment of Mrs. Lucia Livingston Andel as the chairman of the ECSRC. The Council also approved the appointment of Dr. Vincent Richard as the new deputy chairman of the ECSRC. Council agreed to the convening of the 105th meeting of the Monetary Council on Friday, 21st July 2023 in St. Vincent and the Grenadines. The 105th meeting will be presided over by the Honorable Camilo Gonzalez, Minister for Finance of St. Vincent and the Grenadines, who will assume the chairmanship of the Monetary Council on 21st July 2023. The Council welcomed its newest member, Dr. Irvin McIntyre, Deputy Prime Minister and Minister for Finance for the Commonwealth of Dominica, and the Council also offered its gracious thanks to former Council member, Prime Minister Roosevelt Skerrit, who served for an unbroken 19 years. Council members attending the meeting were the Honorable Philip J. Pierre, Prime Minister and Minister for Finance of St. Lucia, the Chairman, the Honorable Dr. Ellis L. Webster, Premier and Minister for Finance Anguilla, the Honorable Gaston Brown, Prime Minister and Minister of Finance Antigua and Barbuda, the Honorable Dr. Irvin McIntyre, Deputy Prime Minister and Minister for Finance for the Commonwealth of Dominica, the Honorable Deacon Mitchell, Prime Minister and Minister for Finance Grenada, the Honorable Joseph Easton Farrell, Premier and Minister for Finance in Montserrat, the Honorable Dr. Terence Drew, Prime Minister and Minister for Finance St. Christopher and Nevis, and the Honorable Camilo Gonzalez, Minister for Finance, St. Vincent and the Grenadines. I thank you. Any questions? The head table.
Les Roy Williams, SKNIS. We have been through a pandemic. We are hearing about the ongoing war in Ukraine, between Ukraine and Russia. The other exogenous shocks that pose threats to the economy of the ECCU. However, I keep hearing that the ECCU is stable, the banking system in the ECCU is stable, despite all of these exogenous shocks to the economy. So I want to ask, especially the governor of the bank, what is the key to really keeping the banking system in the ECCU stable?
Thank you, Chairman. Thank you, Mr. Williams. I think the key starts with the fact that the banking system went into the pandemic with buffers. So if you think about government, we talk about fiscal buffers. If you think about the individual, we talk about some savings for the rainy day. In the banking system, the banks went into the pandemic with high levels of liquidity. In fact, sometimes we say we need to see the banks lend more money, make more loans. So they were very liquid. Secondly, adequate levels of capital. And capital is important because what capital does is the capacity to absorb shocks, even losses, and still remain a going concern and still remain stable and strong. And so the banks went into the pandemic with those buffers. The fact of the matter is that no bank, no licensee came or has come to the central bank for liquidity support during this period. That is a testament to the stability of our financial system. And even in the challenge with the moratorium, as you've heard from the chairman, most of those have now ended and people have resumed payments, or they've been restructured based on the current circumstances and a new payment regime has been agreed upon. So that is testament to that. And then the last thing I'd say is that the backdrop for all of this stability is in fact our strong exchange rate, our strong monetary union. The fact that, like the banks, we have, the central bank, the currency union, maintain very high levels of foreign reserves. So even during a period when we were not getting tourism receipts, when things were difficult for a while, we continue to see strong backing of the EC dollar. That gives confidence, and it's an environment in which others, banks, individuals, businesses can thrive. So the last few years have been difficult, but thankfully those buffers, those arrangements have proven the resilience of the region. And now we are on the recovery path. Thank you, Chair.
Thank you.
Kevin Brown, WinFM. As it relates to the buffers that you mentioned, God forbid the situation in Ukraine gets worse and we see the international financial markets suffer more from it. How do you imagine our buffers will stand up to that if the situation gets any worse? Where would we stand? Does the EC at the moment have the capacity to stand on its own if the situation gets worse internationally and we suffer as a result? Our foreign assets, the ECCU's foreign assets takes a hit.
So because the buffers are strong, people sometimes criticize us for being too conservative, for having too many buffers or too high a level of reserves. But what they do is, as we say, they act as an insurance policy. The fact of the matter is that the economy is actually recovering. So if you look at our reserves are growing in this period. Tourism is coming back. Our largest source of foreign exchange is, in fact, tourism. So if you look at the back end is actually going back up. At the start of the pandemic, we were just over 100. We came all the way down to around 90. Now, remember the law says minimum 60, so we are well above the legal requirement. But now, today we're at 91. We're starting to see it actually going back up. So I think we're in good shape. One of the things that the central bankers around the world, central banks around the world were very careful to monitor during this period was any stress in the financial system and in any, in the global financial crisis, you had significant credit shocks in the system. We did not see that. Even with high inflation, we have not seen massive credit shock events where you have liquidity dries up and then you have, as you saw with the global financial crisis. So we were in good shape. The one thing that I think both central banks and finance ministries are looking at, and certainly the international financial community, is at debt. Because there is a meeting going on in India, I believe right now, G20, and one of the big discussions really is about the debt levels. Debt levels in the world are the highest they've ever been, on the private sector side and in many governments. A lot of governments borrowed for COVID. And so the concern is that as interest rates rise in this environment, so I've moved off the foreign reserves because that is fine, we'll be fine. But in terms of the bigger question, as interest rates rise, some emerging markets, not so much the ECCU, because we have very limited access to the capital markets, but some of the bigger developing countries are going to come into serious debt difficulties and debt distress because all of a sudden their debt servicing has significantly increased because of higher interest rates. That is something we have to watch very carefully. Just by the way, as the chairman indicated in this report, his statement, the debt to GDP ratio in the currency union is actually coming down. So at the end of 2020, the first year of the pandemic, it rose to 88%. 88. From 66, it jumped to 88. Last year, it came down to 78%. And this year, again, it would fall even further because the growth is coming back. So the reserves are in good shape. The exchange rate regime is stable and strong, but we have to look at the global issues, and that's why I mentioned the debt issue, which is a big concern for the international community. Thank you, Chair.
Any more questions?
Right. I realize that another question, Chair, that you mentioned in terms of the economic recovery, which is being driven by tourism, as most of our countries in the Eastern Caribbean, in the ECCU, depend upon tourism, but how regional travel is a challenge to that economic recovery. And of course, it is affecting the economy of the ECCU. It's also affecting the Caribbean single market and economy. And I know that recently there was a meeting which our Prime Minister attended with the CDB. I think it was in St. Lucia, was it? And the reason for calling it, if I'm correct, was to deal with that very serious issue of regional travel. So I don't know if there was anything decided at that meeting that can be shared from that meeting. Yes.
Right. Thank you very much. I was just recounting with Prime Minister Pierre that we did meet in St. Lucia. As a matter of fact, I think I mentioned that some of us reached late because of inter-regional travel issues. But at that meeting, I think it was a fruitful discussion, at least to look at what the issues are and recognize it as a serious matter. I would have said then that our own research showed that St. Kitts and Nevis, the largest source of visitors is actually intra-regional. And so the economy, the growth and recovery was being affected because of intra-regional travel. And I think then all the prime ministers recognized that, and all recognized that a solution had to be reached. As you know, St. Kitts and Nevis had gone ahead with a private aircraft airline, and we are now expecting our first flight to be, I think, on the 12th of March, which would connect us to two source areas and would help with intra-regional travel. But there's a lot more work to be done, but I can say that the prime ministers in the region are very, very keen on resolving the matter.
Well, there is a consultancy which is being done by the Caribbean Development Bank, and they were given up to the 1st of May this year to come up with some kind of solution which governments can implement. It's going to be a roadmap that will involve the private sector working with what exists now, LIAT in whatever form, but it's by the 1st of May they were asked to come up with some. So we're waiting for the 1st of May because the situation can't continue like that. I mean, sometimes to get to St. Kitts, you have to go to Miami. We have a meeting here tomorrow with some people from St. Lucia, and they have to leave to go to Miami, to sleep Miami tonight to come to St. Kitts. And we leave St. Kitts to go to Miami to sleep together in St. Lucia. So 2 days travel for a one-day meeting. That can't continue like that. So we hope by the 1st of May we'll have some sort of temporary solution, looking for a more lasting solution in the medium run. But work is being done on that.
Still on the intra-regional travel issue, I know that taxation has been kind of a contentious issue as it relates to intra-regional travel. Was that one of the things that was spoken about? And possibly was the concept of maybe a across-the-board regional taxation if you're starting your journey in the Caribbean and ending it in the Caribbean, if it's a blanket taxation. Has any of that discussion been had?
These discussions are ongoing, but taxation policy is normally an internal affair. The government decides on their own fiscal measures. But you see, many governments took loans to build the airports based on taxing, and they have to pay back these loans. So it may be difficult to get a uniform tax rate as it relates to air travel. But we need to look at everything is on the table. But I can't give you a definitive response to say, yes, taxation is going to be one of the measures, but everything is on the table. But what I can tell you is many governments have taken loans to build new airports or to improve on the airports based on taxes on air travel. But this is something that we are looking at, but there's nothing on the table as far as what direction they will take as far as taxation is concerned, but it is being looked at.
I just wanted to say, I think it's wrapping up now, but I just wanted to reiterate that this is my first meeting as Prime Minister and Minister of Finance of St. Kitts and Nevis, first in-person meeting. And so I wanted to welcome all the other Ministers of Finance and Prime Ministers in whatever capacity to this meeting in St. Kitts, and we were happy to host our members and to show them some St. Kitts Nevis hospitality. And so I want to say to them that, you know, you are well received here, and we look forward to having you again.
Thank you very much. And I want to thank the Prime Minister and the governance staff of the ECCB for some wonderful hospitality. I have a few more hours left here. Thank you very much, gentlemen and ladies. Thank you very much.
Thank you.
Thank you.